Hi guys, now we're going to discuss redemption of preference shares, another new addition in CA Foundation, new syllabus for accounts. Fairly easy topic and scoring topic for us in exam. What is the entry for issue of equity shares? Bank account debit to equity share capital, correct, but to equity share capital. What is the entry for issue of preference shares? Bank account debit to preference share capital, correct. This is the entry for issue. Section 55 of the Companies Act talks about issue and redemption of preference shares. Now, Act says preference shares have to be repaid within 20 years, meaning equity shares once I issue, I can keep it for lifelong. திருப்பி கொடுக்கணும்னு அவசியமே கிடையாது. If I want, I can repay. See, debentures I have to repay. Loan I have to repay. Equity shares should I repay? No need. But preference shares I have to repay. Are you understanding, guys? Preference shares should be repaid within 20 years. So if I issued preference shares in the year 2000, by 2020 I should have repaid. Are you understanding? So in this chapter, we are not passing entry for issue. Are you getting it, guys? Issue is already passed in different chapter at different time. 20 years back issue பண்ணிருக்காங்க. அதை நான் repay பண்றேன். Okay. So if this was the entry for issue, what is the entry for repayment? Entry, can you guess? Excellent. Preference share capital account debit to bank. You're absolutely right. Spot on. So redemption of preference shares, we have only 4 entries, guys. How bonus I taught you 2 entries. Rights how many entries? Binayak? Rights no entry. Rights where I taught you entry. No entry. It's only computing theoretical X-rate price. Preference shares, there are 4 entries, guys. Okay. Now look at this carefully. I gave you these entries without the amount. Now let me give it with amount. Bank account to preference share capital. Let's say I am issuing preference shares at par. Bank account debit 100 to preference shares 100. When I repay, will I repay 100? I can repay 100 or I can repay more. That means issue and redemption. Issue can happen at par. Issue can happen at premium. Discount is not allowed. Correct. Issue of shares at discount is not allowed. Redemption also can happen at par, premium, or even discount. Are you understanding, guys? That means what entry you passed in issue is of no concern now. எனக்கு அந்த பிரச்சனையே கிடையாது. Because that we have in a issue separate chapter. While redeeming, I can repay ஒரு 100 ரூபாய் share, I can repay by giving 100, or I can repay by giving 120, or I can repay only 90. I am bothered only about passing entries for this part now. Are you understanding, guys? Clear? Following? So, what is the first entry? Now, let's take a scenario. Sir, 100 rupees share, sir. We are repaying it 120. Vechkoga mind. I am repaying it how much, guys? 120. So, entry will be preference share capital account debit. First entry, guys. You can write template. In the chapter la irukradhe 4 entry now. For the 4 entries, we have to compute amount. That's it. So, first entry is preference share capital account debit to bank. You're right. But today I will announce the payment of preference shares. But will I repay today itself? I might pay after 1 week. So, first I have to create a liability. Then I will do payment. Correct? So, I will do preference share capital account debit to preference shareholders account. Are you following? Are you understanding, guys? Next entry will be, entry number 2 will be, for now let's assume, I told you 100 rupees shares we are repaying at 120. For the time being, let us assume 100 rupees shares you are repaying 100. Easy sum, will not come in exam. So preference share capital account debit 100 to preference shareholders 100. My second entry will be preference shareholders account debit 100 to bank 100. That's it. 2 out of 4 entries done. Are you understanding, guys? So what is the first entry? Preference share capital to preference shareholders. Second entry, preference shareholders to bank. Are you understanding this part, guys? Let me slowly introduce the next adjustment. Sir, what instead of 100, if you are repaying 120, what to do? That means you are a preference shareholder. How much should I pay you? 120. So instead of 100 here, I will write 120. Here also instead of 100, I will write 120. Because my liability towards the preference shareholders is 120. Correct? But share capital in books is still 100. What to do with the difference 20? Are you following, guys? Are you understanding? Are you understanding there's a difference 20? That means I have to debit something else. For this 20, I have to debit something else. So my entry will be, this extra 20 is a loss for me or income for me? Where I have to pay you 100, I am repaying 120. So for shareholder, it's a gain. But I am doing accounting in company books. So for company, it's a loss. What is it? You just now told me, premium. So I will create one dummy temporary account called premium on redemption of preference shares account. Are you following, guys? So how is the first entry going to look like? Premium on redemption of preference shares account debit 20. Preference share capital account debit 100. To preference shareholders, the liability to pay you is 120. Second entry is preference shareholders to bank 120. Are you following these two entries? Shweta, you have a doubt? Correct. This one is if it's you're repaying it 120. What if you're repaying only 90? Instead of this, it will come on the other side. So let me write the discount entry. So first, if it's discount, preference share capital account debit is 100 only. In a share capital is 100. But to preference shareholders account, I am going to pay you only 90. So I have a gain. So to discount on redemption 10. Next entry for payment will be preference shareholders account debit 90 to bank 90. Understood? Par means it's easy and the difference itself will not come, same as 100. But sums in the book, discount they have not asked once also. You can copy the template. But exam what they ask? Premium. 99 out of 100 exam sums will be premium. Maybe if examiner suddenly wants to surprise you, he will give discount. We don't know which attempt will be surprise. Only after the attempt we will know. Okay. Following, guys, understanding Rishi. Which chapter are we in? Chapter name. Redemption of preference shares. Perfect. Redemption means what? Repayment. But you will use the term redemption. Okay. Following, guys. So first 2 entries done, sir. I understood. It's easy. What is the next 2 entries? Okay. Now very simple. Keep this aside for a moment. Normally, when you pay rent, what is the entry? 10 rupees rent. Rent account debit 10. To bank how much? After this, what you will do in the year ending? Year ending, this rent will be transferred where? P&L. Excellent. P&L account debit to rent 10. In my P&L debit side, I will write rent as 10. Correct? That means every expense should be transferred to my P&L account or I should transfer to my reserves. Correct? So, this debit, I am going back to the first base, this one, this debit, correct? I should transfer to my P&L or in other words, I should transfer to my reserves. That is my third entry. Transfer of premium on redemption to reserves. So let me write the third entry will be reserves and surplus account debit to premium on redemption of preference shares. How much in our example it was? 20. This is the third entry. Sir, 3 out of 4 entries done, sir. Super. That's it. Are you getting the third entry, guys? Third entry. Hello. But which reserve you can debit? Can I debit any reserve of my choice? No. Write down note. Note. Only free reserves can be debited. Only free reserves can be debited. Are you following, guys? Which reserve? Free reserves. Sir, can I debit securities premium? For that, the answer is not a no. It's yes or no, depending upon this. I will tell you what to do for exam also. If company is following section 133 of Companies Act, which is nothing but accounting standards, then no, cannot use. If company is not following, so here it is, following accounting standards, not following accounting standards, then yes, can use. Are you following, guys? I'll explain the logic. But for exam, where question is silent, question is, you cannot use. You should not use. Even in our study mat, they will not use. Because all the companies will follow what? Accounting standards. Why, sir, this logic? You will get the answer for this mainly in detail only in CA Inter in a topic called Accounting Standard 26. But if you are still curious, sir, I want to know, sir, why I can't use securities premium? Who gave me premium? Which shareholder? Generally, which shareholder will give? Equity shareholder. Equity shareholder kurta premium, how can I use for preference shareholder? I will again repeat. The premium given to me is given by equity shareholder. How can I use that premium for premium redemption of preference shareholders? Are you following, guys? See, when you pass the entry for issue of shares, bank account debit 120, to equity share capital 100, to securities premium 20 of. This 20 was given to me by equity shareholders. How can you use this for redemption of preference shares? So we will not allow. That's what AS 26 says. AS 26 gives you in brief. Okay. Are you following, guys? In intangible assets, you will see about premium, little bit about intangible items. So in more than AS 26, section 52 actually, guys. Sorry, just correct it. Section 52, securities premium section tells this. Are you following? But if you go and ask anybody who's studying foundation, inter, final, qualified CA also, he will tell same thing. Securities premium following cannot use. Securities premium not following 133 you can use. Ask them why. They will tell, I don't know. Standard is saying, your institute is saying, that's it. Logic is very simple. Are you following, guys? Clear? Sir, then next the higher grade will ask, sir, what if that premium was given by preference shareholders? If question gives that data, we can use. Otherwise, if you are silent, you should not use. Sir, all this okay, sir. I understood logic. For exam, what is the third entry? Debit reserves and transfer it to. That premium should be transferred reserves. Reserves and surplus to premium or redemption of preference shares. Which reserve I can use? Only free reserves. Free reserves means what? General reserve or P&L account. Correct? General reserve or P&L account. That's it. Any other reserve can I use? No. Revaluation reserve? No. Capital reserve? No. No reserve should be used. Securities premium also, if question is silent in exam, don't use. That's it. Okay. Following, guys. Entry 3 over. Now we have to go to entry number 4. Entry number 4, you write it down so that your notebook is complete. But I will explain only after we finish one sum, because that's it. I need to explain the concept. Okay. For now, you write down entry 4 as free reserves account debit. You will not understand, guys. To CRR account. CRR stands for capital redemption reserve. CRR stands for capital redemption reserve. I will explain in some time. capital redemption reserve. Done, guys. Explanation for this will take 20 to 30 minutes. If I go in detail, I will do it today, don't worry. But after we do a sum, take your material, redemption of preference shares. We will solve one or two sums first. Redemption of preference shares. Illustration. Yeah, illustration 1. How many sums are there totally? 10 sums. Quickly we will do all sums. I will not be solving all sums. I will read the question, go through the solution, we will jump to next one. Okay. Look at question 1, fairly easy. Exam don't expect, but let's quickly do it. Hinduja company had 5,008% redeemable preference shares of 100 each. That means what is the value of number of shares? 5,000 into 100, which is 5 lakhs. Fully paid up. The company decided to redeem these preference shares at par by issue of sufficient number of 10%, rupees 10 fully paid up shares at par. You are required to pass necessary journal entries. Okay. The company is, what is saying? The company decided to redeem these preference shares at par. So 5 lakhs I am repaying how much? 5 lakhs by the issue of sufficient number of equity shares of 10 each at par. That means what they are saying, look at this. In my balance sheet currently I have preference share capital 5 lakhs of. This I am cancelling and replacing with what? Equity share capital of 5 lakhs. That means I am issuing equity shares and repaying preference shares. Understood? So look at the entry, guys. Look at the first entry in the book. Don't solve this. Let's not waste time in class. We have to finish quickly. Look at the solution. Let's see if you understand. Whichever sum I tell you to solve, we will solve. Okay. So far everybody understood. Look at this. First entry. I am issuing equity shares. You know the entry for issuing equity shares. Bank account debit to equity share capital. Clear? How much? 5 lakhs. Now I am repaying preference shares. Preference shares repayment, how many entries I told you? 4 entries. Fourth entry I am yet to teach you. So it will not come always. It will come only when there is a specific case. I will tell you when that comes. Leave the fourth entry. Third entry will come only if there is premium. Premium is not there. This sum is par. So I will have only entry number 1 and 2. So entry 1 and 2. Look at this. 8% redeemable preference shares. 5 lakhs to preference shareholders. Preference shareholders to bank. 5 lakhs. Sum over. Quickly 15 seconds. Go through and see if you are understanding this. Understood? Easy, guys. You tell me, if you are the examiner, will you ask this in exam? No. So we will quickly go to illustration 2. Illustration 2 also is almost similar. They had 10,000 10% redeemable preference shares of 100 each. That means it's how many lakhs, guys? 10 lakhs. The company decided to redeem these preference shares at par. Again par. They are redeeming at par by issue of sufficient number of equity shares of 10 each at 2 rupees premium. In the sum cum previous sum, what is the difference? Previous sum equity shares are issued at par. Here equity shares are issued at premium. So how many entries will come here? 1 entry for issuing equity shares, 2 entries for repayment of preference shares. Totally 3 entries. Look at this. Bank account debit 12 lakhs to equity share capital 10 lakhs to securities premium 2 lakhs. Repayment of preference shares is at par. So preference shareholders 10 lakhs, preference shareholders to bank 10 lakhs. Quickly go through the 3 entries, see if you are understanding. Rishi, understanding? If you are setting paper, will you keep this question? Yes, no. That. Sorry? See, that third entry, reserves and surplus, will come only if you are repaying at premium. Here I am repaying at par. So why will that entry come? It will not come. Are you following, guys? This entry is not even this chapter, first of all, first entry. It's issue of shares chapter, issue of shares at premium. Yes, doubt? No, no, they are not giving. Okay, let me clarify. They are not giving equity shares to preference shareholders. No, I am separately issuing equity shares, collecting that money and giving that money to preference shareholders. For example, A, B, C, D. A and B could be my existing preference shareholders. I have to repay them 5 lakhs or 10 lakhs, illustration 1 and 2. I don't have that money. So newly for C and D I am issuing equity shares. They gave me how much? 5 lakhs or 10 lakhs. That money is given now to A and B. Are you understanding? So in my balance sheet, earlier I had preference share capital, that will go away, it will become 0, replaced by equity share capital 5 lakhs. Are you getting it? If your question is, sir, am I giving equity shares to preference shares? If I am giving like that, my entry will change. That time my entry will be preference share capital account debit 5 or 10 whatever to equity share capital. Are you following? This is not happening here. I am separately issuing equity shares, collecting that money and giving to preference shareholders. Following up? Yes, doubt? Clear? Okay. How do I know that? Because they are clearly saying by issuing sufficient number of equity shares of 10 at a premium, they are issuing shares, they are not converting. Okay. Illustration number 3. 3 also is one dummy sum, guys. Quickly we will do. G India has 9,000 10% redeemable preference shares of 10 each fully paid up. The company decided to redeem the preference shares at par by issuing sufficient number of equity shares of 9 each. Okay. So what is the number of preference shares? 9,000 into 10. How much, guys? 90,000. So I have to repay preference shares how much? 90,000. So if I have to repay preference shares 90,000, how much money I need? 90,000. How I will get this money? I will ask equity shareholders. Look at the same 3 entries. Bank account debit to equity share capital 90,000. Then preference shares redeemed. Same 2 entries. Quickly, I'll give you 10 seconds. Go through the solution. See if you're understanding in the class itself. We will finish this full chapter within the next 45 minutes. All sums. Yes. No, no, no. I am not. I am taking money from equity shareholders to give to preference shareholders. No, no, no. This is the capital is different. No, premium is different. See, that premium is account write-off. Here I don't have money, so I'm issuing equity shares. That money is given to preference shareholders. Okay, come down. Question 4. We will come back to it in some time. Come to question number. I'll tell you which question to do. Yeah, question number 6, guys. 6, 5, 4, they are all exam questions. 4, 5, 6, they are all exam questions. Look at question number 6. Illustration 6. The following are the extracts of the balance sheet of ABC as of 31st of December. Okay. Share capital 40,000 equity shares of 10 each. So what's the total share capital? 4 lakhs. Preference shares is 1 lakh. Total share capital is 4 plus 1 lakh, 5 lakhs. I'm just doing the computation in my mind. They have given the details of reserves. Capital reserve. What to do with that? Nothing. Useless reserve for this problem. Securities premium 50,000. What to do? Nothing. We can't use. General reserve is 75. PNL is 35. The board of directors decided to redeem the preference shares at par, not premium again. By utilization of reserves, you are required to pass the necessary journal entries. In this, how many journals will come? Only first and second. Will premium entry come? No. So what is the first entry? Preference share capital account debit 1 lakh to preference shareholders 1 lakh. Preference shareholders to bank 1 lakh. Correct? Those are the 2 entries. Look at this. Preference share holders to preference share capital to preference shareholders 1 lakh. Preference shareholders to bank 1 lakh. Are you following the first two entries, guys? Everybody understanding? Clear? Okay. Third entry I am yet to explain. Just give me some time. I will explain that when the time comes. Okay, let me explain what is the last entry, the entry number 4 that you wrote, general reserve to CRR. You remember that, guys? Let me explain that as a fresh concept. So we have so far finished 4 out of 10 sums, illustration 1, 2, 3, illustration 6 except the last entry which I will explain now. Coming back to concept, detailed concept, why are we passing the fourth entry? What is the fourth entry? Free reserve to capital redemption reserve. Okay. Follow guys. Let's take one balance sheet where equity share capital is 100, preference share capital is 50, reserves and surplus is 200, bank loan is 300, creditors is 50. What's the balance sheet total? How much, guys? 700, correct? Fixed assets 400, stock 200, cash 100. Okay, let it be like this. Okay, 700, just random numbers. Now when you repay preference shares, let's say I am repaying preference shares of 50 at par, because all these sums so far they have repaid only at par, basic sums. So if you repay preference shares at 50, what will happen? Preference shares will become, cash will reduce by, I will be left with 50, my balance sheet new total will become 650, correct? Now you studied partnership accounts. In partnership accounts, whom will you, if company is closing down, dissolution, after selling all the assets, whom will I pay? First, whom I will pay? Liabilities only I will pay first. Okay, first I should pay liabilities, creditors, loan, creditors. Then only if I have some money, I will pay whom? Partners, correct? Same concept applies to company. If there's a company, if company is going to close down, if I am selling the assets, whatever cash I have left, first I should pay whom? Loan and creditors, then only I should pay shareholders. But what have I done here? I am paying whom first? Preference shareholders are getting paid first, and who's not getting paid? Loan and creditors. The bank manager is seeing, now I gave 300 rupees. You have not given me 3 rupees also. That preference shareholders fully you repaid. So bank manager is coming and saying, please repay my loan. Can I repay? If I have to repay him, I have how much cash? Only 50 left. Then I have to sell my assets. If I sell my assets to repay, I should better close my business. Correct? So who's not going to be happy about me repaying to preference shares? My liabilities, especially loan creditors, will not be happy. Correct? Correct? So what to do in this stage if they are not happy? Preference share is not a loan, it's a capital. It's part of your shareholders' funds. No, it's never a loan. Okay, if it's a loan, you will pay every year interest. On preference shares, do I pay every year interest? No. So preference share is not a loan. Loan means you have to pay every year interest, debentures, interest, loan, interest. Preference shares, dividend is optional. I don't pay every year. It's part of my capital. But it's part of my capital where I have to repay in 20 years because Companies Act is asking me to repay in 20 years. Are you following? So now you are the company. Let's say this is balance sheet of, for example, let's say, Bini Limited. Okay. Binayak and Co. Bini Limited. Now Bini Limited is confused as to what to do. Because if Bini Limited repays preference shareholders, who's going to be angry? Liabilities. If he is not paying preference shares so that liabilities are happy, who will be angry now? Not preference shareholders, Companies Act will be angry. Government will come and sit on Binayak's head. Okay. So Binayak is now like a cat on the wall. He doesn't know which side to go. If he repays preference shares, liabilities will catch him. If he's not paying preference shares, government will catch him. He can't repay both. He's not having so much money. What to do? What should Binayak do? Make a fresh issue. That's what we saw in previous sums. Now, let's say we are not doing fresh issue. Now, previously when I did the 3 sums, Hayagrivan asked, sir, in the first 3 sums we did fresh issue of equity shares. How much we got? Plus 50. So, plus 50 means 100 became 150. That 50 only I paid preference shares. So, my cash was minus 50 and plus 50. So, overall cash will still be 100. My balance sheet total will be 700. Now, liabilities will be happy. Okay. Cash was before also 100. Now also 100. I am all right. That's what we did in all the previous sums of illustration 1, 2, 3, 4 over 6. Correct? But that time, Hayagrivan asked a doubt. Sir, if I am equity shareholder, why will I give 50 to pay preference shareholders? He raised the doubt that time. Isn't that a valid doubt? If you are the preference shareholder, will you give money so that, sorry, if you are equity shareholder, will you give me money so I will repay preference shares? No. So, let's eliminate that option. What option? Issuing equity shares is not possible. Issuing equity shares is not possible. But I still have to repay preference shares and I have enough cash. 100 rupees is there. Why I need to issue equity shares? Only when money is not there I will issue. Now money is there, why to issue? So now Binayak sitting on the wall, he has to make the preference shareholders happy, make the government happy, make the liabilities happy, and he should also be happy. Very difficult to be happy, correct? What to do? What to do? So Binayak came with a solution. Imagine you are all the liabilities. I am Binayak, I am giving the solution. You should tell me if you are satisfied or not. Binayak is saying, see, reserves is how much? These are free reserves, correct? This free reserves belongs to whom? Company. Specifically to whom in company? Shareholders. Which shareholders? Equity and preference. So Binayak is saying 200 is mine. Free reserves. I can do anything with the free reserves, correct? I can declare 200 dividend. This full 200, I can give it to my equity shares. I can give it back to my equity shareholders. Now, if I give that also to equity shareholders, my cash will further fall. Now, every liability has a corresponding asset. Now, this 200 over here, what is the corresponding asset? Is it cash? Can be anything. It can be cash, can be stock, can be fixed asset. So, this 200 on the liability side has a corresponding asset, correct? Let it be any asset, but it belongs to my equity shareholders, which I can freely use, correct? Are you following, guys? Let's say tomorrow I declare a dividend of 100 rupees. How much dividend? My entry will be reserves and surplus account debit 100 to cash 100. What I am doing? Payment of dividend. Payment of dividend. So what will happen? Reserves instead of 200 will now become, cash will become 0. Now can the liabilities question me? No. Because I am using my profits and giving dividend to myself. Who are you to question? But they are going to be angry. Correct? So what I will do, I will tell my liabilities, see, if I wanted, I could have issued dividend of 100. But I am not doing it because for me your happiness is important. I can't pay myself before I pay you. Repaying this preference shareholders and making it 0, so cash became 50, is not my choice. Government is on my head. Look at that. I can't do anything. But I will do one thing for your happiness. This 200 is freely available to use in the future. Correct? What I will do, from free reserves, I will transfer to CRR the same amount of preference shares which is reduced. Preference shares 50 became 0. So I will transfer, free reserves will now become 150 and CRR will become 50. Nothing is changing in the asset side. It remains the same. Reserve alone, I am breaking it as 150 and 50. Now what is happening? Now how much dividend I can give? Only 150. Before I could have given dividend of 200. Now I can give only 150. That means this 50 cannot be used for any purpose. When you transfer a reserve to capital redemption reserve, that reserve cannot be used freely for any purpose. So I am telling my liabilities, see, I have the ability to spend 200 for myself in the future, but I am reducing that ability from 200 to 150. That means 50 rupees what I can spend for myself, I cannot spend in the future. That means 50 rupees worth of assets will still be in the asset side. So be happy. I am reducing my ability to spend. It's like your parents told you, I will not give you more than 2000 rupees for your birthday. Okay. Your birthday is 3 months away in the future. Now you have with you 0 rupees cash. What you did one day, you went to your parents' room, from their wallet, you stole 500 rupees and you used. That your parents found out. You already spent. I spent off that 500, went to movie, ate popcorn and came. Now in the future in your birthday, will your parents still give you 2000? How much they will give you? 1500. Because you spent it off now, my future spending is reduced. Correct? So, because I paid preference shareholders 50, which I should have paid only in the future, but I am paying now because law wants me to pay. My ability to spend in the future is 200 in reserves. I am bringing it down to 150, so I can spend only 150. That means this 50 in CRR cannot be spent. It will always be CRR till the end of the company. This free reserves can become 0. But CRR will always be 50 till end of the company. That means this equivalent asset will always be in the business till the company is closing down. If the company closes down, when you sell that asset, that 50 cash will be paid to whom first? Liabilities, loan and creditor. So I will tell them, see, this 50 is now saved till the end of the life of the company. You will be paid if the company closes down. Are you happy now? As a creditor, are you happy, guys? Are you understanding what we are doing? Why we are transferring 50? Because my 50 cash was reduced now, I am reserving my right to spend 50 in the future. Are you getting it, guys? Now, same example, you will tell me now how much to transfer to CRR. Okay. Equity share capital 100, preference share capital 50, free reserves 100, loan 200. What's the balance sheet total? 450. Assume fixed assets is 200, current assets is 250. Okay. Example. Now, I am repaying preference shares. So, 50 became 250 became 200. How much I will transfer to CRR? 50. I am locking my ability to spend in the future. So, this 100 becomes 50. Okay. Now, same example, guys. Slight change. Okay. I repaid preference shares how much? 50. So, my cash from 250 became 200. Now, like the illustration 1, 2, 3, I am issuing equity shares of plus 50. So, my cash again became 250. Now, how much to transfer to CRR? 0. No need to transfer. Because my cash is still 250, my shareholders' funds is still 150. Earlier it was 150, now it became 150. Are you following, guys? Next, third scenario. If you are able to answer this, you are getting it correctly. Equity share capital 100, preference share capital 50, reserves and surplus 100, liabilities 100, total is 350, 350, fixed assets 200, current assets 150. Now follow very carefully. I am repaying preference shares. preference shares became, so cash reduced 50, current cash is 100. Now I am doing a new issue of equity shares plus 20. So cash increased by 20. Cash new is how much to transfer to CRR? If you get this correct, you got the concept. How much to transfer? How much, guys? I will transfer 30. Why I will transfer 30? Earlier my shareholders funds put together was 150. Now it is 120. Earlier my cash was 150. Now it became 120. So loss in cash for me now is 30. So I will save only 30. Are you following, guys? Reserve and surplus will become 70. Reserves will become 70. CRR will become 30. Sir, what if in this sum new issue of equity shares is 500? How much will transfer to CRR? Nothing. Because my cash is increasing, not decreasing. My shareholders funds is increasing. So for this they gave a formula in the book. You wrote entry 4 in your template. There you write down below that note. Amount to be transferred to CRR is equal to. Now be very careful, guys. This entire example I taught you, follow, look at this, very, very important. This entire example, I dealt with it as if preference shares are repaid only at face value of par. What if 50 rupees premium, 50 rupees preference shares, I am repaying at 70? Are you following, guys? Ignore premium for the purpose of CRR. Meaning, premium repaid is not considered in shareholders funds. You will still get the same answer. 50 rupees is the face value. You are repaying 70. My answer will remain the same. You will compute as if you repaid 50. So for the purpose of CRR computation, consider only face value. Because that much only is the fall in shareholders funds. So look at this. Amount to be transferred to CRR is equal to face value of preference shares redeemed minus what, guys? Minus what? Face value of fresh issue of equity or preference shares. Write this as a note below journal number 4. So amount to be transferred to CRR is what, guys? Face value of preference shares redeemed minus face value of fresh issue of equity shares or preference shares, if any. Now go back to the very first, this illustration. In this illustration, the face value of preference shares redeemed was 50. Fresh issue was 20. That's why you told transfer is 30. In one more scenario example, face value of redemption was 50. Fresh issue was 0. So you still have 50 transfer. In one more sum I told you, face value redeemed was 50. Fresh issue also 50. So transfer to CRR 0. Sir, what if redeemed is 50, fresh issue is 70, I am getting negative 20, nothing to do. That's why in illustration 1, 2, 3, if we go back and see illustration 1, 2, 3, in all the 3 illustrations, if you see, for example, in illustration 1, if you see, fresh issue is 5 lakhs, redemption is 5 lakhs. So 5 lakhs minus 5 lakhs, how much for CRR? 0. Formula is enough for exam. But are you understanding the logic behind the formula, Vinayak? Okay. Yes. How will you not create an impact if you repay? 70. Shareholders funds, no. The capital is the falling only by 50. Premium is excess. That time what will happen? Your point is valid. Sir, what will happen if I repay? Let's take a sum like that. Then I'll explain in that sum. Now come back to which sum were we in? Illustration 6. In illustration 6, how much we repaid? 1 lakh. What is the fresh issue? In illustration 6, repaid is 1 lakh. What is the fresh issue? Fresh issue. Check. No fresh issue. So how much to transfer to CRR? So it will be 1 lakh minus 0. That's why third entry, you will transfer to CRR from what reserves I told you? Free reserves. That's why general reserve P&L account debit to CRR 1 lakh. Now go through these 3 entries. See if you're understanding quickly. Done. Following, guys. Shweta, understood? Sure. Okay. Question number 7. Illustration 7. That's it. With this redemption of preference shares, concepts are done. We just have to practice sums. Easy or difficult? That's why I brought down from inter to foundation. Okay. Fine. C Limited had 3,000 12% preference shares of rupees 100 each. So what is the total preference shares? 3,000 into 100, which is 3 lakhs. The company had to redeem these shares at a premium of 10%. Came off premium. So far I was thinking easy, sir. No, premium came. So I will repay 3 lakh 30,000. I will repay how much, guys? 3 lakh 30,000. It was decided by the company to issue the following. For the purpose of redemption, they are issuing the following: 25,000 equity shares of 10 each. How much equity shares? 2 lakh 50, and debentures 1,000 into 100, which is 1 lakh. You are required to pass. The issue was fully subscribed and you have to pass, show journal entries. So this we have to do a proper full-fledged sum for 4 or 6 marks. Okay. So in this, they are repaying preference shares at what? Premium. That means entry 3 also will come. So entry 4 also will come. Should I transfer to CRR here? Yes. You are repaying how much? Preference shares repaid how much, guys? 3 lakh 30. But I told take only face value. For the purpose of CRR, take only what, guys? Face value. Logic I will explain by the end of this sum. Why you will not take fully. So you will take 3 lakhs minus what is the fresh issue of shares? Any fresh issue? Read properly. Is there any fresh issue? It was decided by the company to issue the following: 25,000 equity shares of 10 each. How much, guys? Then fresh issue is there, no? How much fresh issue? 2 lakh 50,000. So how much to CRR? I told take only fresh issue of what? Look at my notes. Look at the notes. You will compute face value of preference shares redeemed. In this question, what is the face value of preference shares? 3 lakhs minus, look at the notes, face value of fresh issue of equity of preference shares, if any. In this question, what is the face value of equity shares? 2 lakh 50. So how much for CRR? 50,000. Let's go check if they transferred 50,000 in the last entry. Where is that? P&L to CRR 50,000. Are you following, guys? Are you understanding? But how many entries to pass? When I look at the question itself, I should know. Redemption of preference shares, how many entries? 4 entries. Apart from that, extra what is there in the sum? Issue of equity shares, redemption of preference shares, 4 entries including CRR. Issuing equity shares, how much? 1 entry. Issuing debentures, how much? So totally 6 entries. Go down and check if they have 6 entries. 1, 2, 3, 4, 5, 6. Perfect. Are you following, guys? Let me run through the 6 entries for you to understand. Look at this. First entry, we are issuing equity shares. How much? 2,50,000. After issuing only I can redeem. Then only I will have cash. Look at this. Bank account debit to equity share capital 2,50,000. Are you following? Next time issuing debentures. So entry will be bank account debit to 14% debentures. How much? 1 lakh. Are you following, guys? So bank account debit to equity share capital 2,50,000. Bank account debit to 14% debentures 1 lakh. Are you following, guys? Clear? Next, let's go in the order that we know. What is the first entry? Redemption of preference shares. Preference share capital account debit to preference shareholders. Look at this entry. Preference share capital account debit 3 lakhs. Premium on redemption of preference shares 30,000 to preference shareholders 3,30,000. Next entry I told you is payment of preference shareholders to bank. How much? 3,30,000. Then in our flow, the third entry was transfer of premium to general reserve. Look at this. P&L account debit to premium on redemption. How much? 30,000. And in our entries, last entry was transferring to CRR. How much, guys? 50,000. That is this entry. P&L to CRR 50,000. Are you guys following? Understood all the entries? How many of you studying this chapter for the first time? Oh, everybody understood? Sure, guys. Understood all the 6 entries, guys. See, I am not solving because we can save time. We will do next sum. Getting it? This is a proper exam question for 4 to 6 marks. 6 journals, 6 marks. Since it's the first time new addition to syllabus, they might ask a basic sum like this. Proper sum with all transfer. Understanding? Now, Hayek had a doubt. Sir, ideally, shouldn't it be 3,30,000 minus 2,50,000 transfer to CRR should be 80,000 only? No, sir. Was his doubt. Correct? Actually, it's 80,000 only. If you look at this, my free reserves reduced here by how much? By transferring to CRR. And by transferring premium, it reduced by another 30,000. So effectively, my reserves have dropped by how much? 80. That means the money available, my savings is reduced by how much? 80. So liabilities are happy. Because this is 30 only, the other one is 50. That's another way of learning. Now you got the answer, Hayek. Clear? Everybody following? Clear? This much in-depth concept they will not ask in exam. Exam, what they want? 6 journals. You understood all the 6, guys. 4 for preference shares, 1 for issuing equity shares, 1 for issuing debentures. That's it. Okay. Come down. I'm just seeing which sum you can solve. Okay. Let's go to previous sums that we missed in the gap. 7 is over, 6 is over. Correct? 5 and 4 is pending. Let's do both of those. Yeah, now it's time we can do 5. 5 we can easily do. Illustration 5. They have given us the following information. Equity and liability. Shareholders' funds is 2,90,000. Reserves and surplus is 48,000. Current liabilities, trade payables is 56,500. Then they have given some assets, cash and bank. Don't expect this balance sheet to tally. If it's tallying, well and good, but they have given an extract. Okay, fine. The share capital consists of this 2,90,000, correct? This 2,90,000 what a breakup is giving. Consists of rupees 50 each equity shares, 2,25,000 and preference shares of 65,000. So he has given the breakup. Equity shares is 2,25,000. Preference shares is 65,000. Are you following, guys? Clear? So equity is 2,25,000. Preference is 65,000. Reserves and surplus comprises of profit and loss only. That means the full 48,000 is P&L. Are you guys following? Understanding, guys? Next, in order to facilitate redemption of preference shares at a premium of 10%, that means preference shares is how much? 65,000. Premium 10% means how much? 6,500. So totally I will repay how much, guys? 65,000 plus 6,500 is how much? 71,500 only I am going to repay. Okay, wow. For that, company is doing three things. Sell investments for 15,000 rupees because they don't have money. What is the value of investments in books, sir? 18,500. That is being sold at 15,000. So I have a loss of 3,500, but I got cash of 15,000. To finance part of redemption from company's funds, subject to leaving a bank balance of 12,000. What is the current cash? That means they are saying cash can reduce, but my closing cash should be at least 12. It should not become 0. I should have a closing cash of 12,000. To issue minimum equity shares of 50 to raise the balance funds required. Beautiful sum. In every sum, they tell us how much equity shares have to be issued. In this, I have to find out how much equity shares have to be issued. Proper, nice exam sum. Okay. Now, how many entries? Let's try. In this preference shares, all 4 entries will come. Yes, all 4 entries. Apart from that, how many extra entries we have? Sale of investment, 1 entry. Issuing equity shares, 1 entry. Totally 6 entries. I will do the sum in detail. Let's understand one by one. First, we should know how much equity shares are issued. Otherwise, there is no point. Correct? Look at the question and tell me what is the cash available in question. 31,000. Perfect. In this, how much I can use? 12,000 you should keep it separately, like a savings, correct? So I can use how much? Correct? 19, sure? Yeah. 19,000 I can use. Then, apart from this, I am selling investment. Investment sold, how much? 15,000 rupees. So how much cash is available now? How much? 34,000 rupees cash is available. How much cash do I need? You are repaying preference shares. For repaying preference shares, face value was 65,000 plus 6,500 was the premium. So you need 71,500, but I have only 34,000. That means if I minus 71,500, what is my shortfall? How much? 37,500 rupees I need money. How will I get this? The equity shareholders are sitting. I will give money, whatever you want. Correct? That is the last entry. To issue minimum equity shares of how much, guys? 50 each to raise the balance of the funds required. So that means 37,500 divided by 50. How many shares? 750 equity shares into 50 will be issued. Are you following, guys? Let's go check equity shares issue. Look at this. Bank account to share application 37,500. So this is the new working that we have in this sum. Are you understanding, guys? Easy, clear, guys? Can you quickly compute how much to transfer to CRR? It will take, if you understood the concept, it will take you 6 seconds. How much to transfer to CRR? How much? Okay. How to compute CRR transfer? Follow carefully, guys. What is the face value of preference shares redeemed? 60. 65,000 is the face value of preference shares redeemed. What is the face value of new equity issue? 37,500. So 65,000 minus 37,500, how much? 27,500 will be the amount I will be transferring to CRR. Can you see 27,500, guys? Clear? Understanding? Following? This is the workings. Quickly make a note. Quickly make a note, guys. Then rest of the sum, you have to pass 6 journal entries. 4 for preference shares, 2 for issue. Can you try and pass the entry once? You pass the entry, don't look at me, use these workings. Pass the 6 entries without looking at the solution, guys. Don't look at the solution, including recording students. So far, the 6 sums I solved. You are just looking at the screen. This sum, I have done some base workings. Using this, I want you to pass 6 journal entries. What are the 6 journal entries? 4 entries for redemption of preference shares, 1 for issue of equity shares, 1 for sale of investment. These will be your 6 entries. Quickly pass it, guys. Recording students included. Pass it in 5 minutes. We will check it. Because only when you solve, you will know the mistakes that you are doing. Because after going home, you don't have the time. Straight away, you will go to exam. So at least 1, 2, 3 sums we will do in the class. This sum, little bit I am helping you for the 6 entries. Next sum, you will do everything by yourself. Quickly, guys, do it fast. Then we have to do one more sum. Do the 6 entries. If you are done, check the answer in the book. See if you are having entries as it is. I will start discussing in few minutes. I am keeping the question for others. Recording students, don't search for fast forward button. Do it fast by yourself. Finish, Shweta. All 6. Okay, let me brief through. By now you should have finished, guys. Look at this. We found out 37,500 is the share issue. So bank account to share application 37,500. That same share capital 37,500. Then redemption of preference shares, we saw preference shares capital is 65,000, premium is 6,500, 271,500 in our template entries. First entry, were you able to do it daily by yourself? Next entry was, we will go in the same order. After this, next entry is payment of preference shareholder to bank 71,500. Then transfer of premium P&L to premium 6,500. Then transfer of CRR P&L to CRR, how much, guys? 27,500. And then sale of investment, bank account, loss on sale to investment. Are you following, guys? Clear? But you just have to be careful that in this question, reserves and surplus given is how much, guys? 48,000. Can you see, guys? You just have to be ensured that this is sufficient. In this question, it is sufficient. So we didn't discuss. Correct? Sir, what do you mean? P&L is 48,000. So from 48,000, first we sold investments. What is the loss in that? 3,500. Then premium was there. Premium on redemption of preference shares. So minus 6,500. Then we transfer to CRR, how much? 27,500. After doing all of this, what is the closing balance of P&L? 10,000. So balance is still available, so we were able to do. But some sums, what if balance is not there? We have to check that also. Are you understanding, guys? Clear? Can we proceed to next sum? Have you all understood this honestly, guys? Able to do it? Okay. Next. Illustration 4. So if we finish 4, 1 to 7 all done. Correct? Illustration 4 is easy. I will brief. I want you to try it. No journals. Only workings. Somewhat like this. But not the same thing. But in this ideology, you have to do some workings. Okay. Illustration 4. The board of directors of the company decided to issue, look at this, issue. How many shares they are not saying? We have to compute. Like previous sum. We have to compute minimum number of equity shares of rupees 9. One share is 9 rupees. We have to issue. How many shares to issue? You will find, Delhi will find. To redeem 5 lakh preference shares. Okay. The maximum amount of divisible profits available for redemption is 3 lakhs. That means the P&L is how much, guys? 3 lakhs. Calculate the number of shares to be issued by the company to ensure that the provisions of section 55 preference shares are complied. Also determine the number of shares if the company decides to issue shares in multiples of rupees 50 only. Now, I'll give you a brief, then you compute. What is the preference shares here? 5 lakhs. I want to redeem preference shares. At par or premium? Par. Nothing about premium. So, if I redeem 5 lakhs, how much to transfer to CRR? 5 lakhs. Because I am not doing fresh issue. But for me to transfer to CRR, the entry is P&L to CRR 5 lakhs. But do I have 5 lakhs? No, I have only. That means I can transfer to CRR only. That means I have to do some fresh issue. How much is that fresh issue is asking? How much, guys? 2 lakhs. But how many shares? You compute that number of shares. Look at this. So, out of 5 lakhs, 3 lakhs if it's profit, P&L. So, I am left with only 2 lakhs. How many shares? 4. So, follow, guys. Look at this. We almost finished the sum. Look at this. Amount of preference shares to be redeemed is 5 lakhs. I told you, for transferring to CRR, I have only 3 lakhs. That means if 3 lakhs is there, then minimum proceed should be at least 2 lakhs. That you already found out of, correct? When I explained itself, you understood. So if 2 lakhs is what I have to make fresh issue, 2 lakhs divided by 9 is how much? 22,222.22. Now you have to round off. Round off to what? You can't do 0.22, correct? So either the answer will be 22,222 or 22,223. Sorry. So now look at this. Either it has to be, the answer we got is 22,222.22, correct? Till here, have you all understood? 100%. Now look at the beauty of this. Using basic maths, you will do it as 22,222. If I issue 22,222 shares, one share is how much? 9. How much you will get? One lakh 99,998 of 998. How much you need? You need 2 lakhs, but you didn't get 2 lakhs. Are you following? That's why you have to issue how many? 2222. 3 into 9, how much is coming? 2 lakhs? 7. So what they are asking, are you understanding? Here you can't apply basic maths and round off to 22,222. Gone. Because minimum money, minimum fresh issue to do is how much, guys? 2 lakhs. If you keep 22,222, you are raising only 1,99,999. You are 1 rupee short. 1 mark also matters. So you should make it 22,223. That's the answer in the book also. 22,223. Are you following, guys? But they told the number of shares should be in multiples of 50. Correct? So 22,223 is not multiple of 50. So they are making it 22,250. I can either make it 22,200 or 22,250. I can't reduce it. So I am increasing it to 22,250. Are you following, guys? Delhi surely understanding? No, it doesn't look like that. 22,000. See, you understood the answer up to 22,223. Okay. Question last line, what he has told, the number of shares to be issued should be issued in multiples of 50. Is this a multiple of 50? No. What is the nearest multiple of 22,223? 22,200 or 22,250, because both these can be divided by 50. If you make it 22,200, it is less than this, not sufficient. So you will make it 22,250 is what you will issue. Understanding a proper question for 3 to 4 marks, but you will not be able to solve unless you know the concept of CRR. If you mug up CRR formula, you will not understand. Are you getting it? Honestly, are you understanding, guys? Here online, if you are understanding, can you put in the chat yes if you understood, please? I want to know if you have actually understood. Put in the chat. Otherwise, any doubts, put it over there. Sure, all of you clear, guys? So illustration 4 is done. 5 we finished. 6 also over. 7 also over. 8, 9, 10 now. How many are there totally? 3 more. Okay. Okay. This sum let's do illustration 9. 8, sorry. Okay. Why I am not solving, writing every sum, just to save time. Explaining, going through the solution. Illustration 8. The capital structure of a company consists of 20,000 equity shares of 10 each, fully paid up, and 1,000 8% redeemable preference shares of 100 each. So what is the equity share capital? 2 lakhs. Preference share capital is 1 lakh. Okay. Undistributed reserves and surplus. General reserve is how much? 80,000. P&L is 20,000. They are talking about something called investment allowance reserve, out of which 5,000 not free for distribution as dividend. Total is 10,000. That means it's some new reserve, investment allowance reserve. What is the balance in this reserve? No, 10,000. In that 10,000, 5,000 is not free for distribution of dividend. That means how much is free? 5,000. That means he's trying to communicate, out of the 10,000 reserve, I will split it into two. The investment reserve has two parts. 5,000 you consider as free reserve, other 5,000 is not a free reserve. Understood that? That is enough. Rishi, understanding that? Because he is saying not free for distribution as dividend is 5,000, the other 5,000 is free for distribution as dividend. Securities premium 2,000, what to do with that? Nothing. In this chapter, ignore securities premium. Cash at bank amounted to 98,000 rupees because we need to repay preference shares. I have only 98,000, but preference shares is how much, guys? 1 lakh into 100 is how much? 1,000 into 100 is how much? 1 lakh. I need to repay 1 lakh, but I have only 98. That means that also is something you should keep in mind. Okay. Preference shares are redeemed at a premium of 10%. 1,10,000 I need. I have only 98,000. Simply you can't go past the entry. You have to check if cash is available. And for the purpose of redemption, directors are empowered to make a fresh issue. Super, sir. Make a fresh issue after utilizing the undistributed reserves and surplus. This is mix of the fourth sum. Okay. Subject to the conditions that 12,000 shall be retained in general reserve and shall not be utilized. You have to pass entries for the above arrangements. Preference shares, how many entries? 4 entries. Issue of equity shares, how many entry? 1 entry. We all know the entries. Amount only we have to fill. Are you following, guys? Clear? Okay. Correct. So I will give you 2 minutes time. You need to find two things. How much I will transfer to CRR? What is the fresh issue of equity shares? Nothing new. Already I have done, but I will do it again in detail. But I want you guys to try this. If you find out how much is CRR, how much is fresh issue of equity shares, you can do all the other entries. So give it a shot. Give it a shot. Try it out, and then I will explain. Don't do 6 journal entries. Working note you do and try to do this. Then I will explain. Okay. I can do it, but I want you to try it because only then you will know how much you have understood. All the previous sums, I have done the whole sum. Proper exam question for 6 marks. Do it, guys. Do it fast. Finished. Oh, Binayak, can you give me the answers, guys? So that recording students can cross check if they also got the same wrong answer or same correct answer. Yes. One by one. Vinayak, CRR 25,000, fresh issue. CRR 75, fresh issue 25,000. Dilli Babu, same answer. Anybody else different answer? Others, same. All of you got the same answer. Okay, fine. Let's quickly cross check. I'll just cross check over here. Excellent. Fresh issue is 25,000. Transfer to CRR, where is that? 75,000. Perfect, guys. Excellent. You have done by yourself, means you have understood. But let me brief for the benefit of everybody. What is the general reserve available in this question? Totally 80,000, but I can use only 20. He told don't touch. That means you should not touch. So I can use only 60. What is the P&L available? Profit and loss account 20,000. Help me with the values. Any other free reserve? Yes. Out of that investment allowance reserve, I can use 5,000. That means from my existing reserves, I can transfer to CRR 60, 80. Correct, huh? Correct, guys. Yeah, I can transfer how much? 85,000 rupees is available to transfer to CRR. However, my preference charge is how much? Face value 1 lakh. I'm going to repay at how much? 1,10,000. That means you are going to repay premium of how much? That premium will reduce from my reserves. So out of the total freely available free reserves of 85,000, 10,000 will be used by premium on redemption. That means how much is still available with me? 75,000. This 75 only I can transfer to CRR. Correct? So my total issue of fresh issue is, redemption is 1 lakh. Total redemption is 1 lakh. In this redemption, I am having 75,000 from existing reserves. Then balance 25,000 will be fresh issue. Are you following, guys? That working only they would have done somewhere down here. Okay. I don't know if you understood this or not. I don't know if you understood this also. Have you understood, guys? How 25, 75 came? Everybody did by yourself. Perfect. Understood this, how CRR came as 75,000? Because CRR transfer is 75,000, I have 75,000 from reserves. So I have to make a fresh issue of 25 so that I can do redemption of 1 lakh. Now all the entries is normal. If you look at the entries, fresh issue will be 25,000. Online, if you got the answer before I solved it, type yes sir, I got 25, 75. Then 75 is transferred to CRR in the following 3 sources. Preference shares redeemed 1 lakh preference share capital account debit, premium on redemption 10,000, 2 preference shareholders 1 lakh 10,000. My payment is preference shareholders to bank 1 lakh 10,000 and profit and loss transferred for premium 10,000 rupees. Are you guys understanding? Clear? Okay. Fine. Okay. I hope you guys online also understood. Last 2 sums are nothing new. Concepts are done. Like this, he will twist and ask. Cash, I can't use 12,000 rupees. Reserves, I can't use 20,000 rupees. How much is CRR? How much is fresh issue? This is the maximum complication possible in this chapter, even in CA Inter. All these sums are CA Inter sums. Now in CA Foundation. Okay. Perfect. Now, illustration 9 is nothing new. Same sum, one more model. Balance sheet is given as follows. Now you will know, by the time I read the question, you will know, how, yeah, I should do this. Preference shares is 35 lakhs. Equity shares is 1 crore. But the difference is, this preference shares is 70 paid up. Securities premium 5 lakhs. CRR is already there in question. That means in the past, they have done some preference shares redemption or something. CRR is there. 20 lakhs. Sir, what I can use CRR for? What is the purpose of using CRR? CRR cannot be used for anything. CRR is section 69 of Companies Act. You can't use for anything except one use. It can be used only for bonus issue. How we finished bonus issue chapter the other day. So in the bonus issue chapter, I told you, for issuing bonus shares, you can use CRR, securities premium, free reserves. I told you should use CRR first up. Why I told first up? In bonus issue, CRR should be used first. Why? Because that is the only purpose. CRR can be used only for bonus, then better use for that. Your parents gave you 5,000 rupees, 10,000 rupees. They told 5,000 should be used only for buying books. Can you use for something else? No, you will use for that. Like that, the CRR, only one use is bonus. So better use for that. What if I use for bonus? Anyway, it will be converted back to share capital. When will share capital be paid? At the time of winding up. You got the logic, guys? So CRR is basically locking the money till the time of winding up. Even if you convert to bonus shares, it will be repaid only at the time of winding up. So money will be paid only at the time of winding up. So creditors won't mind if you convert to shares. Are you following, guys? Clear? Sweta, understanding? Okay. General reserve is 50 lakhs. Bank balance is 15 lakhs. Next, under the terms of the issue, preference shares are redeemable on 31st of March 2022. We are now in 31st December 2021. They are repayable after 3 months. Correct? After 3 months, 31st December 21, 31st March 22. After 3 months, we have to repay at 5% premium. First somewhere they are giving dates. If they give dates, what you should do? Write the date in journal entry. Otherwise, lose 1 mark. Your choice. In order to finance the redemption, the company makes a rights issue of 50,000 equity shares of 100 each at 110 per share. So new issue of rights. 10 rupees is what? Premium. Rupees 20 payable on application, 35 including premium on allotment, and the balance on 1st Jan 2023. This you are already very good. Share issue, application, allotment, first call, first final call. So issue of shares, you know, left, right, center. Studied in school, already we studied in company's account, issue of shares, correct? And allotment was made on 1st March. So till here, anything complicated? No. Basically, they made a new issue of shares. How much, guys? 50,000 into 100 at 110. I don't care about premium. Only I will take the face value. How much? 5 lakhs. Preference shares is 35 lakhs. Remember that. Okay. Next, the money due on allotment was duly received by 31st of March. Perfect. The preference shares were redeemed after fulfilling the necessary conditions. You have to pass the necessary journal entries. Oh, he told ignore date column. Super. That means no marks for date if you write also. 50,000 into 50 lakhs. Sorry, you are right. 50 lakhs is the value of rights issue. Look at the entries, guys. Okay. Now, preference shares is partly paid up. Correct? So, section 55 says you cannot redeem partly paid up preference shares. So, what you should do? Make it fully paid up, then redeem. That's all. How to make fully paid up? Look at this. Preference shares final call. How much? 30 rupees, and he paid bank account to 8% preference shares. 30 rupees, 15 lakhs. So, now preference shares from 35 lakhs plus 15 lakhs. Now it has become 50 lakhs. Correct? Now what I will do? Repay. So, unkita 15 lakhs vangi, you want 50 lakhs tharan. Act is like that. Act is saying you should redeem only fully paid up shares. Okay. So I will ask you, you give 15 lakhs, I will repay 50 lakhs. Okay. Next, also they did some rights issue. Application la how much? 20, allotment la 35. Those entries you know, guys. Application, allotment, look at that. Bank account to share application 20 per share, then allotment 35 per share. I am running through these entries because nothing new in this. Okay. So bank account to share allotment, you know these entries very well. Now we have to transfer to CRR. How we will transfer to CRR? How much is redemption? 50 lakhs. How much is the new issue? New issue is how much? New issue, follow carefully. This is where the dates come important. When am I doing redemption of preference shares? First, look at this. The preference shares were redeemed on which day? Check the question. Are redeemable on 31st of March. So 31st March 2022. Up to this date, how much preference shares or equity shares is done? Up to allotment only is done, correct? Because the balance final call is on, look at this very carefully, 1st Jan 2023. Are you following, guys? So if you look at the breakup, it is 50,000 equity shares of 100 each at 110 now. Let us write that breakup. Rupees 110 per share, they are collecting as follows. How much on application? 20. Allotment how much? 35 including premium. I don't care about premium. I only need face value for CRR. This call is happening after redemption of preference shares, correct? That means as of 31st of March 2022, how much of fresh issue is made? Only 20 plus 25. So you made only 45 into how many shares? 50,000, correct? How much is that coming to? 22 lakh 50,000 is the amount of fresh issue. What is the face value of preference shares redeemed? 50 lakhs, correct? So now I will do 50 lakhs is the face value of preference shares minus 22 lakh 50,000 is the new issue on the date of redemption. So how much for CRR? 27 lakh 50,000. Check the answer. CRR 27 lakh 50. Understood? Sir, why sir unnecessarily in this sum they gave application allotment first call for this only? Like this, they will change little bit here and there and ask, but we know the logic of CRR. What is the equation? Face value of preference shares redeemed minus fresh issue of equity of preference shares, both face value on the date of redemption, whatever this is there. So you got 27 lakhs 50. This workings you have to show somewhere, guys. This breakup, this you have to show. Here he gave in the narration itself, he showed. Are you following? Then after this, you know, look at this. Preference share capital account debit 50 lakhs. Premium on redemption, 5% premium, 2 lakh 50. Two preference shareholders, 52 lakh 50. Preference shareholders to bank, 5250. General reserve to premium, 2 lakh 50. So this is redemption of preference shares in combination of fresh issue of equity shares with application allotment call. Easy or difficult? But lengthy. 8 marks or 6 marks you can ask. Are you following, guys? Everybody genuinely understanding, guys? Okay. Super. What about the amount received excluding premium on fresh issue, which is 22 lakhs 50,000 till the date of redemption should be considered for calculation. What I explained only is the note. He is saying why I should take only 22 lakh 50, because on the date of redemption I received only this and you should not consider premium. That's why he is saying exclude premium. Understood? Okay. Last sum, illustration 10 also is the same, guys, with small adjustment. Look at this. He is saying with the help of details in previous sum, further assuming that the preference shareholders holding 2000 shares fail to make the final call, what I should do? Reduce that, because they have not paid. Made the final call under section 55. You are asked to pass the necessary entries for 31st March with corresponding figures from 31st December, assuming the shares in default are forfeited after giving proper notice. Same thing, look at this. Only thing is share final call. Okay, basically is continuing the sum, guys. So you are asked to pass the entries, relevant extracts as of 31st March 2022 and corresponding figures on 31st March 2021. Okay, how much call money they have not paid, guys? Yes. Same sum. So how much is the balance call money? We will see here. Out of 110, 20, 35 is paid here, 55 is paid. So final call will be how much, guys? 30, yeah? Can you check once? 30, final call is 55, but they are not bothered about final call. What are they explaining here? He is saying, so here if you see, allotment is 35, application is 20, 55. So 45, 55 is left, correct? In this previous question, when was the final call? And the balance on 1st Jan. Now what are they saying in illustration 10? With the help of illustration 9, further assuming that the preference shareholders holding 2000 shares fail to make the payment of final call under section 55, you are asked to pass the necessary journal entries and show the relevant extracts from the balance sheet as of 31st March 2022. But final call is only on okay, fine, correct. Okay, you are absolutely right. So this 55 rupees not paid is for equity shares. They are talking about, you are absolutely right. So in the starting, that preference shareholders had to pay 70 rupees, 30 rupees unpaid. In the 30, 2000 is not paying. So they are asking that, perfect. So preference share final call to share capital 15 lakhs. In that 48,000 paid into 30, 2000 into 30 did not pay. Therefore, my new preference share capital will be how much, guys? Minus 60,000. So from 50 lakhs, how much is not paid? 60,000. You will be left with 49 lakh 40,000. Now look at this carefully. If they are not paying call money, I will forfeit fully. So my preference shares is 50 lakhs. I'll explain with rough working. 50 lakhs. Out of this, who didn't pay call? 2000 shares into 30. Because they didn't pay call money, full shares are forfeited. So I will also forfeit what they paid. So totally I will forfeit 2000 into 100. How much? I will be forfeiting 2 lakhs, correct? That means how much is left in preference shares? So when I am redeeming, when I am repaying, I will repay only 48 lakhs, correct? I will repay only 48 lakhs. What is the amount of new equity issue? 22 lakhs, 50 in the previous sum. So from this I will minus 22 lakhs 50,000. How much is CRR? 50,000. Let me explain again for the small confusion which came. Look at this, guys. The total preference share capital, if everybody paid the money, it would have gone to 50 lakhs, correct? But one shareholder who is having 2000 shares did not pay 30 rupees per share. Because he didn't pay 30 rupees per share, his full share I will forfeit. That means I will forfeit full 2000 into 100. That means 2 lakhs I will forfeit and I will not repay him the money. So how much of shares I should redeem? Only 48 lakhs. So out of 48 lakhs, how much is fresh issue from the previous sum we computed? In equity, 22 lakhs 50,000. So I will transfer to CRR only 25 lakhs 50,000. Are you getting it, guys? Understanding? So let's go check if the CRR is correct. Yeah, look at this. Transfer to CRR is 25 lakh 50,000. Are you following, guys? Understanding? Hello? Everybody clear? What is additional in this sum? You have to pass entries for forfeiture and calls in arrears. That you know from the basics. So I am not dealing that in redemption of preference shares. fully paid up. So in this fully paid up shares is only for 48,000 shares of, because he didn't pay call money. If you don't pay call money, I will forfeit. No, that is basics, not section 55. Normally in share capital chapter, if one shareholder is not paying call money, I will forfeit. So I forfeited. Understood, Sweta? Clear? Okay. Initial attempts, I think they will ask the illustration 9-10 is little on the heavy side. They will ask the other sums. 1 to 8, you be very clear. 9-10, go through once. Okay. So with this, we are done with all the 10 sums in redemption of preference shares. Have you genuinely understood, guys? The below practical sums also are very similar only. Nothing new. You can go through that. One sum is there for practice. You can go through this at your end. Fairly simple. Okay. And practice. That's it. Nothing else is left in this chapter. We are fully done. How many of you studying first time and understanding fully? Perfect. So with this, we are done with redemption of preference shares. Thank you.